All yours, Mahir.
Thank
On
you,
the spotlight.
Shazia. Thank you. Straight to me. Uh, welcome everybody. Here we are again, week after week, into this amazing sessions with Krishak. And the information that he shares with us is invaluable. The information that he provides is amazing. And you know what? It's not just the information, it's the way he passes it on. So you can hear something from an individual or a teacher and not really make sense. So what's special about Krishak is he he's he's an amazing instructor because he breaks it down to the level of your understanding. So the beauty of Krishak is whether you're brand new to Forex, like I was at the beginning, intermediate, or even an advanced trader, he can meet your needs in order to take your skill to the next level. Now, I know this because I'm a martial arts instructor, and there's always room for improvement. There's always room to get better. There's always things that you can learn from individuals that have more knowledge than you. And Krishak is as good as you can get as far as his education, his level of training, and his teaching strategies. And that's what makes him special. And so, week after week, we're here. And today, the markets are very unique. I can say unique. People talk about the markets and the beauty about Forex is it doesn't matter if the dollar goes up or the dollar goes down or the euro goes up or the euro goes down. There's always a method that you can make money on market conditions, whether they go up or down, uptrends, downtrends. And who better to explain this than Krishak? So I learned from him personally, so I speak out of experience. And I highly, highly recommend anyone who's interested in learning a new skill set and learning how to create additional stream of income to learn about Forex, even if it's an introductory class, just to learn the basics to see if it's something for you. Take some time and look into it and master it like I did and change add something to your portfolio. So Shazia, thank you for allowing me to present Krishak and the introduction. And I welcome everyone that's here on this call and that's watching this afterwards. So Krishak, the floor is all yours. Thank you.
Hello, everyone. Thank you so much, sir. Again, it's lovely being part of QBN, and it's more of just giving out the right information to everybody. And me and sir, we have been speaking about the markets for quite some time now. It's been, I think, more than 6 months, if I'm not wrong. And we have seen how the markets were before President Trump came in, and now, with all the geopolitics going on. So we have seen multiple trends. So we have seen how the markets have transitioned from an uptrend to a downtrend, then it consolidates for a while. And it's all about identifying the direction of the market, as I always say. And this is what I have been discussing with a lot of people is if you know the direction of the market, you're 50% there. You're 50% there. The rest 50% is understanding psychology, understanding the strategy, understanding risk management. And this is what we are going to focus on. So let me go ahead and present my screen. I have the template ready for you folks already. So there we go. All right. Now this is gold. Before we deep dive into the session today, let me first help you understand why gold has been going up. A lot of for the past weeks, we have been seeing gold pushing lower. So we have been seeing that the gold has been going lower and lower and lower. It went from $5,600 an ounce up to 4,100 $100 an ounce. So there was a big drop in price. The reason why the markets were going down, it's because of geopolitics. It's because of geopolitics. It's because of what was happening around the world, right? With US Iran war, which drove the oil price up, dollar up, oil up. That means dollar was up as well. And gold was down. Gold was down. Why was gold down? Is because gold is in inverse relation to the dollar. That means if dollar goes up, gold goes down. So this is what we have always been looking at, and this is one of the most simplest and easiest way to understand the markets is the correlation between one asset to the other. One of the easiest, that means you could take advantage when the markets are going up and when the markets are going down, as Sir said, it's all a matter of the direction, right? Being in the right side of the market. And now the US has already proposed Iran to end the war. So they've already sent a end of the war agreement to Iran, and they're still evaluating. The deadline is tomorrow, which is Friday, and then we hope that everything goes back to normal because Strait of Hormuz is shut. Again, it is still shut. They say that it's open, it is still shut. It's because of oil disruption. So if the Strait of Hormuz is shut, the oil is being disrupted. That means the supply is lower, the demand is higher. This is what was driving the oil prices higher. Let me also help you understand the oil chart. This is this is what led to oil going up all the way from 69, $70 a barrel. This was on March 2nd, up to $112 a barrel within a span of a week's time. Oil shot up by 62% within a span of a week's time. So it's very important to know that if the markets are going up, if the markets are going down, what are the trading opportunities that we can look at in the markets? We are currently looking at, in hindsight, everything looks fair and square, but then when we are live in the markets, it's when we gotta understand that no, these are the opportunities that we can capitalize on. Right? It's always good to capitalize on such opportunities, and this is how traders are successful. It is on capitalizing on the opportunity with the direction of the market, keeping the direction in mind. Let's go back to our session. So this is why we see that gold is starting to go up now because again, there's an agreement to end the war, which is still being evaluated. We don't have a clear answer if the war will end or if it will continue. So this is why gold is now trying to push up. Oil is down to 92. It was actually down to 87 for the day. Now it's back to 92. So we still see some uncertainty in the market. The markets are not really sure. This is why first of all, it's important to understand when is the right time to trade, when is the right time to stay away from the markets. When the markets are consolidating, when there's a lot of indecision, uncertainty around the world, the market will always do such a thing. That means no clear direction in the market. Everybody is waiting for a bigger news, right? Let us focus on how can we capitalize on such moves in terms of psychology, because this is all psychological. Now, the problem is not the strategy, by the way. If a lot of people think that I want to learn a strategy. I want to learn how to master the markets. Problem is not the strategy. The problem lies in themselves, in managing emotions, in managing psychology. So we're going to focus on psychology. This is where everything lies. So the first 50% is identifying the direction of the market, if it's bullish, bearish, sideways. And then the rest 50% is understanding the psychology of a human brain as to how does our brain react when we understand that the markets are going in a particular direction, are we in? So the first and foremost question that we got to ask is our emotion when we are in a position in the sense when we are trading, when we are in a trade. That's the number one thing to understand and ask yourself that how am I feeling? Am I feeling excited? Am I not feeling happy about the position? Or am I feeling neutral about it that you will let the markets do what it needs to do? This solves 30% of your problem. When you ask such questions to yourself, this will solve 30% of your problems. Now, keep in mind, none of the strategies are wrong. Strategies does not mean that we don't focus on strategy. Strategy is a part of it, but it cannot be the entire thing. It cannot be the entire trading industry. Strategy is a part of it, right? And I always say this, there are three pillars, let's say there are four pillars to finance. The four pillars, they're fundamentals. The second is technicals. Third is psychology. Fourth is strategy. Fundamentals usually give you an idea, uh, why are the markets moving? Why are the markets moving? Why is gold going up? Why is gold going down? Why is oil going up and vice versa? So fundamentals usually help you understand why are the markets moving. Technicals help you understand how to enter and when to enter a trade, right? Looking at the charts, looking at the candles, candle patterns, trend, supply, demand, everything comes under technicals. Psychology gives you an understanding how to survive in the markets. If our mind is not right, if we don't look at the markets, and if we are very emotional, we are very emotional in terms of money, right? We'll also speak about fear and greed as well. So psychology is all about how to survive. How do we feel when the markets are going, when the markets are doing what we expect to do? How do we feel when the markets are not doing what we expected it to do? It's going the other way around. How do we feel? Do we feel that we need to double down so that we can compensate on the loss plus make some extra money? This is what depletes a lot of accounts in finance. This is why a lot of people are not successful. It's because of psychology. The problem is not fundamentals. The problem is not technicals. The problem is psychology. Strategy at the end is, of course, your idea of trading, right? How would you like to trade the markets? Would you like to be a scalper? Would you like to be a scalper? Would you like to be a day trader? Would you like to be a swing trader? These are the four pillars. This is how I usually trade, and this is what I call as the blueprint of finance or the blueprint of trading. Once we understand these four pillars step by step and ask questions that why are the markets moving? Look at news. Go on Forex Factory, go on FX Street, look at news. That's free of cost. How to enter, why to enter, and when to enter. Look at trading view. Look at all the charts. Psychology. Ask questions to yourself. Strategies, of course. You got to first understand whether you want to be scalping, day trading, and swing trading. Back to psychology. So our emotion is when we enter in a position when we are away from the charts as well. A lot of people feel that, oh, the markets have gone up. The markets rallied without us, right? The markets will not care if we are in a position or if we are not in a trade. The market will do what it needs to do at the time, right? And then when they see such a huge push to the upside, people get FOMO, fear of missing out. People then usually get FOMO'd, fear of missing out. Why do they get FOMO'd? It's because the markets has now gone up or down without them being in a trade or without them being in a position. This is why it's very important to understand that we are in the markets. The markets are not going anywhere. The markets are going to be there tomorrow. The markets are going to be there after an hour, after 10 years, after 15 years. The markets are not going anywhere. But if you fall into this trap, fear of missing out, impulsive trades, impulsive decisions, what happens next? Your capital depletes. Your hard-earned money goes to zero. You deposit 1,000, right? And then you make impulsive decisions. What happens? The market is not doing what you expect because your psychology is not right. Your mindset is not right. Work on your mindset first and then look at the charts. A calm and a composed mind will give you an outcome that you wouldn't even expect. Something out of your mind. So it's very important to understand that Fear of missing out, FOMO. These are the things you should avoid as a trader. Fear of missing out, revenge trading. Revenge trading means not accepting a loss. Loss is a part of the game. Loss is inevitable. Any business you do, losses are inevitable. We cannot avoid losses. Can we decrease it? Yes, we could decrease it, but we cannot avoid it completely. That is why this is the template that I have created for you all, is to ask questions as to what is your win rate. I will also be filling this template out for your understanding as well. Be okay, be okay to not be in a trade. If the market is moving without you, be fine. It's fine. The market is moving without you. You're not in a position. You take a back seat, take a step back, watch the markets, see how it is moving. So you will be well prepared when the market does the same move again. That could be tomorrow, day after a week. So you'll be much more prepared. You'll be much more confident. You'll be much more prepared. You'll be much more confident, right? Don't chase the dollar amount. Never chase the dollar amount. Always focus on percentage. Always focus on percentage, because when you focus on percentage, you detach yourself from the dollar amount. When you detach yourself from the profit and loss, you only focus on the process. Outcome follows. The next step is focus on the outcome. Oh, sorry, focus on the process, and the outcome follows. And the last point is manage risk. When I say manage risk, do not risk more than 3% a trade, or do not risk more than 4% a trade. Keep a threshold saying that if you have, you could only risk so much and so much for a trade, meaning do not risk more than 3%, 4% a trade. Higher the risk, higher the profits. But then when you take one big loss, you'll have to take multiple trades to compensate for the big loss. Make your losses small, focus on winning big, not hitting a home run all the time, because home runs are very rare. We all know that. But small, consistent profits can technically grow your account to something unimaginable by the end of the year. To give you an example, what trading can do, let me fill this out. Let me fill this entire thing out. Let's take a very realistic win rate of 50%. Every trader, let's say, for example, me as a trader, I have a win rate of 50%, for example. I'm risking only 1%. I'm just going to take simple numbers to keep the calculation easy. I'm risking 1%, but my reward is also 1%. And on the other side, I'm risking 1%, but my reward here is 2%. Total number of trades I have taken is 10 trades. Let's say I have taken 10 trades a month. This is on monthly basis. I have taken 10 trades a month. How many trades I won? If my win rate is 50%, I won 5 trades and I lost 5. Correct? Yes. And then if I win 5, I won 5%. If I lose 5, I lost 5%. Correct? My profit will be 0% for the month. Plus commission, I will be losing money. Make sense? I will not be making anything. I will have to pay. I will be losing money. But then if the same thing, we do the same thing. I won 5 trades. Uh, my reward here is 2%. 5 into 2, 10%. I lost 5 trades. My risk is just 1%. I lost 5%. How much is my profit? 10 minus 5, 5% profit. Plus commission, I'm positive. I'm positive for the month, right? What changed? A minor switch in risk to reward ratio. Trading is not all about win rate. It is about how much money are you risking to make X amount or X percentage. So trading, this module has helped me become a profitable trader. Risk to reward. I have seen people have a win rate of 90%. They win 9 trades out of 10. Why do they still lose money? Because they're okay to lose 10% and just get a reward of 2%. So they're okay to lose 1,000, but just to make a profit of $200, which is a negative risk to reward. There is a very rare chance that the person like that with a negative risk to reward can be a profitable trader. Even in business, we keep our losses small and we compound on our wins. This is what trading is all about, leaving the strategy aside, technicals aside, fundamentals aside. This is what it is. And when you trade less, I'm sorry, folks, you can take a screenshot of this. If anybody would like to take a screenshot, feel free to take a screenshot of this and then we can move on. All right, there we go. Let's move on. The next important thing is less is more in trading. Less is more in trading. When I say less is more in trading, what does it mean is that take less trades, but make sure that you take good quantity and good quality. Focus on quantity and quality. Quantity in the sense, not in number of trades, the size of one position. When I say quantity, not that you take 5 trades a day, or it's not that you take 10 trades a day. Focus on the position size, increase the position size. So what happens is you capture the big chunk of the market, right? When I say less is more, trade less. I personally take just 1 or 2 trades a day. I just take 1 or 2 trades a day. I trade from 8 a.m. Eastern up to 11, 9, 10, 11, 3 hours. I just trade for 3 hours, the first 3 hours. That's it. I don't trade the entire day. I'm not sitting in front of the screen for the entire day because I know that my mind can only make 1 or 2 good trading decisions when it's related to money. And I want to make this decisions as soon as I wake up because my mind is fresh and I don't do anything before I start trading. My first and foremost thing is the moment I wake up, I do all the thing and then I jump into the charts. I directly jump onto the charts and see how the markets are with a fresh mind. I don't look at the phone, I don't look at any other external things. I just look at the charts and see how the markets are. This has improved my trading as well. Less is more. Focus on quality. Focus on quality. Take 1 or 2 trades a day. That's it. You don't need more. You don't need anything more. And always have a stop loss. What is a stop loss? Stop loss is a seat belt for your account, right? If the trade does not go your direction, if the trade is not going your way, we have to put a stop loss saying that I'm not okay to lose 3%, more than 3%. 3% is my limit. I'm not okay to lose more than 3%. Be aggressive in managing the risk. Why? Because risk is the only factor that we can manage in trading. We are not in control of the markets. We cannot control the markets. We cannot control the price movement. We cannot control our take profit. The only thing that we could control is entry, when to enter, when to stay away, and risk. These are the only 2 factors that we could control is entry and risk. If I don't like how the markets are moving, I will stay away from the markets. It's okay if I don't make money one day. I'm not losing on anything, right? But I'm preserving my capital. I'm preserving my capital for the next day, right? If I lose, if I force something today, I will not be confident tomorrow. right? So it's very important to understand psychology. I've tried 10 strategies, everything works. That is, if your psychology is right. If your psychology is on point, each and every strategy that you are being adapted to works for you, right? So build your ground from psychology. You folks can take a screenshot as well. I'll reframe it for you. So this is what I have mastered, and I tell everybody that it's always good to master psychology. And Mr. Maher, he is master of psychology, as we have been speaking a lot on psychology as well. Whenever we have a chance, we just, we just have a chat, and yeah, it's always good to speak about psychology. I see a few questions. I think this is fundamental to accept that loss and profit go hand in hand. You're correct, Shazia. Yes, not always expect to win profit all the time. You're absolutely correct. It's always about risk to reward, right? Lose less, win more. You think being part of trading community helps traders remain positive and improve? This is a very good point, Shazia. Yes, being a part of a trading community actually holds you accountable, because then there are other people as well, right? So what I would like to propose is create a trading community where it's not just the instructor who's sending in charts or sending in recommendations. It's for everybody. It's for everybody to speak with each other, connect with each other, and see what they're exactly doing. How's their mindset like when they are in trade? Are they trading anything? Are they staying away? Why are they staying away from the markets? Because they might be seeing something that I might not be seeing, right? There's always a time when I sometimes don't see what my clients see. They are the ones who tell me, "Hey, this is exactly what's happening." I said, "Thank you for bringing this up because I was not able to look at this." Right? So, because each and every mind is different, each and everybody's mind is very different. So, you are on point, Shazia. Yes, it's always good to create a trading community, and I would love to create a trading community with QBN, and just bring everybody into the same community so we can discuss. Let's make this interactive and engaging. Engaging. So it's always good to know that what each and everybody is doing in terms of trading. Any more questions, folks? I think we did cover a lot on psychology. It was a very quick session. I didn't know that the time has passed. Any other questions? Yeah.
I was just curious to know who in this group is actually trading. So who is learning and who is actually trading? So we'll start with Paola. Are you trading or you're learning? ¿Estás haciendo trading o estás aprendiendo? He's on mute. Estás mute. You're
Let me
mute.
let me fix the.
Oh, they're not able to unmute themselves? Okay. We can allow them
Sometimes
to.
it's sometimes a corporate is set up in a way that just bear with me.
I can stop my
Can
I
you
screen
got I
hear?
got
share.
it. I got it. They
They
can
should
unmute
be able to
themselves.
now. She should be able to unmute.
Yeah. Pueden hacer unmute. You guys can do unmute.
Hola, buenas tardes.
Buenas
Hola,
tardes.
hola. Estoy aprendiendo. Estoy en la fase final del curso. Todavía no estoy operando, pero sí le quería preguntar a Krishak una cosa.
She's
Eh,
learning. She's in her last stages of learning, and she's not actively trading, but she did have a question for you.
ok.
Sure, go on. Of course.
Gracias. ¿Tú crees que cuando abren los mercados debemos esperar unas horas a que baje la volatilidad para podernos posicionar?
Do you think that when the market is open, should we wait about an hour uh, to see if the volatile market goes down, if the market becomes less volatile?
Which market are you discussing about? Is it
¿Cuál,
a stock exchange?
cuál mercado
Pues
estás hablando?
Es que se supone que a mí me van a fondear una cuenta para yo empezar, pero tengo que estar primero en demo y va a ser en el mercado de Nueva York con acciones. No sé a él qué le parece mi
Oh,
comienzo.
acciones, stock market. Okay, so she's gonna start with the New York Stock Exchange in the stock market is what she's talking about. That's a whole other
Brilliant.
world.
Yeah, that's amazing because the stock market is usually from um, 9:30 a.m. Eastern up until 4 p.m. Eastern, right? So it's always good to wait for the first 15 minutes, right?
15 minutos
S-
es bueno esperar por lo menos 15
Ah, ok,
minutos.
ok, ok.
So it's always good to wait for the first 15 minutes because the market needs to settle for the first 15 minutes. Because if you wait for an hour, you might miss the opportunity because the
Mm.
moves usually happen in the first 2 hours of the market opening and the last 2 to 3 hours. And then the market is dead in between. So the first 2 hours and the last 2 hours.
The first 2 hours and the last 2 hours are the most profitable, or the most not profitable, but the most
Volume, highly
volume.
volatile,
Yeah.
and
La
there's a
mayoría
lot of
del
volume.
volumen es las primeras 2 horas y las últimas 2 horas. Entonces, si esperas mucho, puedes perder esa oportunidad.
Ah, ok. Pero yo quiero aprender a hacer de Forex, claro, pero hay que empezar
Yeah.
por lo que es más fácil.
Yes, she wants to eventually learn Forex as well, and that's why she's here. But for her, she feels that the trading stocks right now is a little bit easier. So that she's going to start with that, and she'll eventually move to Forex. Gracias, Paola. Thank you.
Gracias,
Thank you.
Maher.
Brilliant.
Gracias,
Thank you.
gracias.
All right. ¿Alguien más or any other questions?
I can't see
Okay.
me in the chat. I see Natasha says I'm learning. I'm not sure about George, but I know George is a regular attendee. Mudassir, I think, is learning because he had a question a few days ago about we had a translation check. So I know he's re-watching the replays, so he's learning. Mudassir, am I right? I know.
Yes, yes, thank you. Yes, I'm still learning and just got into it 3 weeks ago. I understand some basics now, thanks to Krishak and for these live sessions. I'm hoping to start trading sometime soon.
Thanks a
Great.
lot. I appreciate it.
Thank you.
Thank you.
Fantastic.
Carmen, I'm not sure, to be honest. I know Carmen does come, but I'm not sure. I've not had that communication. And nice to see you, Pilar,
Yes.
as well, because I think I've seen you after some time.
Yes.
Nice to see you, everyone. It's the first
Yeah.
time I joined this group, so it's very interesting. It's everything about mentality and mindset. It's very good.
Thank
Thank
you.
you.
Thank
Thank you.
you, Pilar.
And she hit it right on the money. You know, a lot of mentality and mindset goes into Forex trading. And when I first started trading before we end this call, I remember something that was called the 90-90-90 rule. 90% of the people
Yeah,
lose 90% of their funds in the first 90 days.
90 days.
And
Yes.
that's why it's so important to not just learn on your own. It's good to start with the basics. If you want to watch videos and use AI, but to have a formal lesson with Krishak is invaluable. And I didn't fall into that 90-90-90 because of that. And so I encourage everyone to take formal lessons, and that's extremely important. I do know that a lot of emotion and demo accounts are extremely important at the beginning. And I was talking to Paula the other day, or I don't remember who it was, about demo accounts. It might have been Natasha. Um, Demo accounts are extremely important. And when you're trading on a demo account, and you lose a lot of money on your demo, even though it's not your own money, you still get emotional. Your heart rate races and your blood pressure rises, and you're like, wow, what if that was my money? And then you become scared. And then the vice versa. What if you made a lot of money on a demo account and you feel upset because what if I had my own money and I could have made all that money? But you can't think that way. You shouldn't think that way. You should try. This was a great demo account is the best method to test your emotions. Okay. So that's why demo accounts are extremely important because you can not just trade and work on your skill set, but you can work on your mindset. So that's it for me. Thank you, Krishak, for your wonderful explanation today and everybody that joined us. I guess we'll see you. Do we have another session next week,
This
Shazia?
is the fourth session. So we finished the
Okay.
sequence of
Yes.
four. So
Okay.
we will now review and then get back to everybody when the next is. We are thinking maybe we shuffle the timing to try and swing it to the other side of the world. So let's see. We'll see. We'll keep you informed. But
All
Krishak
right.
is still going to be around. You just guys have to keep watching the social media. We're trying to spin you out of that regularity so that you keep alert. But we have all the replays of all the sessions that we've done, and they've all been different. So if you go back, I think we've had sequences of 4, we've had sequences of 6, and they've all been different. And it's all useful to watch every single one.
Absolutely. Everyone have a blessed day, and we will keep in touch and see you guys soon. Bye
Thank you,
for
everyone.
now.
Thank you, sir. Thanks, Shazia. See you, folks.
Thank you,
Bye-bye.
Shazia.